The overheated jobs market appears to be cooling off so far this summer. The U.S. added 209,000 jobs in June. That is 15,000 fewer than economists predicted. Yet the unemployment rate remained near half-century lows and fell to 3.6%. The report sent stocks seesawing on Friday, capping off the holiday-shortened week with a few fireworks. It's also sparking fears that the Fed is on rate to raise rates again as early as this month. Natalie Brand is at the White House. Natalie, good morning.
Good morning, Jeff. President Biden is touting this latest report as showing steady growth, but the job market also revealed some signs of cooling. As you mentioned, the big question ahead, how does this data factor into the Federal Reserve's decision on interest rates later this month?
Today's job shows that jobs report shows that Bidenomics is working.
As President Biden banks on his economic strategy heading into 2024,
I believe that every American willing to work hard should be able to get a good job.
Economists describe Friday's job report as mixed, with more than 200,000 jobs added in June, but fewer than expected. Mark Hamrick is a senior economist for the personal finance website Bankrate.
The job market remains quite robust, but the pace of hiring is moderating.
Government, healthcare, and construction are among the sectors that saw gains, while hiring slowed in retail and transportation. Employment in leisure and hospitality remains below pre-pandemic levels. Overall, unemployment remains at near historic lows. And wages grew, up 4.4% over the past year, slightly higher than the annual rate of inflation.
Doesn't mean that workers feel like they're, ready to high-five each other in the sense of having won the battle against inflation, but it means that that balance has somewhat shifted back more favorably to workers.
But that could also mean another rate hike later this month by the Federal Reserve.
So as the Federal Reserve looks at its main missions in life, maximum employment, well, let's check that box off. The job market has an unemployment rate below 4%, but inflation, with the rates running well above the Fed's target of 2%, the Fed looks at that and says, oh, we still have more work to do.
So all eyes will be on the Consumer Price Index due out next week to get a better read on inflation. Many economists believe the Fed could raise rates 2 more times before the end of the year, depending on what the economy does in the months ahead. Dana?
All right, Natalie, we'll keep watching. Thank you.